Hi, my name is Roxane Webster.
And I'm Keith Alba.
We are the owners and partners of my home team at Keller Williams Advantage Realty.
That's right. And you've tuned in for the latest episode of
Yes, Keller.
That's right. This is our opportunity to kind of give you our thoughts and insight on what we're seeing in the real estate market and things that may be affecting the real estate market.
Boy, Keith, do you remember at the beginning of COVID, at the beginning of 2020, when I said, keep your eye on the tech market?
Right. Yep, that definitely came through.
Right. And at the time, the projection that I was making with a very, very foggy crystal ball, as it's still foggy because we've never been through a global pandemic and inflation and major war in Europe and all the money that's been thrown into the economy. But it made sense to me that if the tech world all of a sudden realized that they didn't need these big campuses because everybody was working at home, that it wasn't going to be too long before they caught on to the idea, well, if we're doing remote labor, we might as well go to a place that charges 1/10 for that labor. And whether or not that's the cause of it, we're starting to see some disruption in the tech market.
Yeah, absolutely. And it's a combination of stuff, right? There was a huge run up in the stocks that were tied to these tech companies. There was a lot of conversations about speculation and the prices being overinflated. And there's been a correction in that market, the stock markets, and specifically in regards to tech. A lot of these tech companies have gotten beaten down pretty hard, right? And now all of a sudden they're saying it's truing it up. Well, you couple the lower valuation for these tech companies, and then interest rates on money is going up. The feds are very loud about what they're doing and the fact that there's more that's going to be coming. Now the cost of borrowing money is going up, so they're not as easily going and chasing after it. The hedge funds are starting to pull back and kind of rein things in because they're feeling a little bit of speculation. All this means for that tech industry is that they need to make sure that their income statements and balance sheets are looking strong. Well, occupancy and salaries are the two highest fixed income or fixed expenses on any sort of business, right? And so, whether it be in the commercial industry where we're going to start seeing a lot of this inventory come back on the market, or as we're seeing with Netflix, right? All of a sudden now, as inflation is going up, consumer spending is starting to pull back. Netflix just lost like 200,000 subscribers over the last quarter. Their response to that is to lay off and cut costs and things along those lines. So real estate in and around tech heavy cities is on the high watch list at this point. Places like Austin, Texas, some cities in Utah, some places down in Florida, they saw this massive appreciation and growth, and now all of a sudden it's kind of teetering on those areas. And real estate is hyper local, but it can also drag down the national, piece. So
we were watching throughout COVID, throughout this period of time, just as one bizarro huge impact on the economy after another just keeps kind of water skiing over the top of the housing market, right? And we may be starting to see, now granted, when we looked at these interest rate increases, the intent was to cool the market, right?
It's true. I mean, that's what the Fed does. Their goal is to try and keep inflation in and around 2%.
That's right.
On an annual basis. The latest numbers we saw, 8.3% is what the latest.
Well, that's where it should be. Yeah.
That's a reduction, right, from the previous numbers, but that was only 8.5 to 8.3. So there's a small little blip of those things, but there's also a lot of unknowns that may be coming, right? You mentioned the war in Europe over there. Ukraine is the world's leading exporter of wheat, right? You got Russia and their gas and oil. They're also a major fertilizer manufacturer.
Right. So food and fuel, right, are being directly impacted by a land war that is showing every sign of digging its heels in and getting entrenched. So
you see prices in those industries continuing to rise, which means the feds are going to continue to push up interest rates, which is going to further restrict companies from borrowing the money that's out there.
From buying property. So who knows, right? As usual, you know?
It's something to keep an eye on, right? We're definitely not saying the sky is falling and something's coming because it's too early to tell. But yet, there's some signs that are out there that's like, okay, we need to keep an eye on.
That's right.
I was listening to a podcast the other day, and they were saying that in inflationary type periods like this, when the feds have had to increase rates and done it for a consistent period of time, it's almost always sent us into a recession. So there's potential recession talks, and we haven't talked about it a lot lately, but there is still that inventory of those forbearances that are out there. And we're seeing the front end of some of those people that have come out, not able to requalify. The notice of election and demands in Colorado are what is filed first.
Like the commencement of the
That's the start of the foreclosure process. I've been tracking those through the pandemic and continue to do so. And after the last 3-4 weeks, I've seen a massive increase in the numbers. Previously, on a weekly basis, there was maybe 30 to 40 startups on average per week. Now that number is up over 100. It's 120, 130 on a weekly basis that we're seeing come through on this.
And it makes sense, right, from a timing point of view. A lot of people, if you remember, that we all had that easy button, in March, April, May of 2020, where everybody, every time I open my email, my car company, my credit cards, my mortgage company was saying, hey, you want to skip a few payments? Hit the easy button, right? And before you know it, a lot of homeowners, whether or not they intended to, though I think most of them did, found themselves in a forbearance situation where they had forborne making mortgage payments for a while. And some of those folks went a full 18 months without making mortgage, which isn't just the mortgage payment, it's principal, interest, tax, and insurance, right? So on a $500,000 house, you might find yourself at the end of that 18 months owing the bank 50 grand. So after people came out of that forbearance period, which the last of them came out of that period in fall of last year, fall of 2021, then they commenced a negotiation process with the bank to figure out how are those monies going to be repaid. We have in Colorado, usually the bank lets somebody be behind on the payment without an agreed upon process for as low as 2 months, as much as a year, but usually it's in that 3 to 6 month range. We're in May of 2022 and the last people came, so we're right on track. Right, all the people who've been unable to negotiate repayment plans with the banks are initiating foreclosures.
That's right. In the foreclosure process here in Colorado, typically around 120 days, so 4 months before the filing of that, before it hits the public trustees fairs and gets auctioned off.
And then it's going to get interesting.
Yeah, the question is how many investors are out there that are going to buy them back prior to them going back to the bank, and how long before we burn through those buyers and those foreclosures start hitting the market, right? As soon as they start hitting the markets, the banks aren't in the business of owning real estate.
They don't want to be owned.
They don't want to own it, and so they're going to underprice it for a quick sale. That underpricing, if there's a lot of them that come to the market, is going to put downward pressure on those prices that's there. So,
There again, unlike the Great Recession, in the Great Recession, we were in a clearly declining price environment. Right. So every time the bank, and when Keith says that the banks don't want to be in the business of owning real estate, they're not set up for it. It's very costly. They've just went 18 months without getting any payments. Right. They're still responsible to pay those taxes and insurance, even though you didn't pay them. Right. So that's very costly. And then there's legal fees. And then now they are the proud owner of this property. And now they have to hire an asset manager to make sure that the property is preserved and that the plumbing is in good shape and that there's no mold happening. And then they hire a realtor and then they put it on the market. And this is all if they haven't sold it on the steps. So they may well have this asset that's not performing for 2.5 years. Right. And in the Great Recession, what we saw was that because the values were going down, by the time they actually were ready to hammer a sign into the yard, they said, let's break this so low that it sells like this. Well, but they based it on the current market conditions. So I think that buyers who are thinking about holding off and waiting for these foreclosures, their only experience has been a clearly declining price environment where those were great deals. In a market where the values are stable or even continuing to tip upward, the bank is going to base the price of that property on right below where they think the market value is. So if they perceive that the market value is still continuing to appreciate, you're not going to see screaming deals in these foreclosure spaces. They'll be pricing it right at or just a scotch below the market value. But the days of being able to get something for 15 or 20 or 30% below market value, I wouldn't be holding my breath.
Yeah, no, I definitely don't see that in the near future.
Yeah.
And depending on, are we in a recession at the time that these
Who knows?
or what's going on with the war?
Refer to the fog on our crystal ball again.
But definitely something that we're keeping an eye on and looking down the road, because all of these factors will potentially affect our real estate market here in the Denver metro.
If you have any questions about this, we'd love to talk to you. Reach out.
Absolutely. And then remember, hit that subscribe button below so that you get all these valuable honest hours on a weekly basis. And if you really want to be on top of it, hit that little bell over the side. You'll get a notification when we post our new ones. See you next time.